Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at ZIM Integrated Shipping Services, ticker ZIM. This stock hit a 52-week low. I keep getting notifications about it, so I've been meaning to look into it, and I finally got the chance now. So this stock was hyped, very popular a little while back. It showed a lot of potential, but we'll dig into the numbers here and see, is this just one of those fad stocks where it skyrocketed off a bunch of hope and hype, and it's just kind of died back down? It started trading in 2021, and it entered the market just shy of $5, and as of today, it's trading for just north of $23. I'm not even putting the buy, hold, sell ranges on this one because when we get into the numbers, you'll really see why. Here are those numbers. We see super strong growth on top line. If we factor out 2019, super strong growth in earnings, lots of green. We see assets growing very quickly, liabilities growing quickly, but not as fast as the assets are growing. The tangible assets have moved from negative to positive. There's just a lot of good here. But we have analyst expectations of loss of $2.57 this year and $2.60 this next year, compared to the $38.49 that they achieved last year. There is a huge difference there. Now, the company says that they think that they will come in with a positive EBIT for this year of 100 to 500 million. We'll have to see about that, because last year they came in at 6.2, almost 6.3 billion. So 500 million would still be a huge drop off of that. But they might be squeaking in with a positive EPS. And if they prove the analysts wrong, come in with strong beats, this stock's going to rally. This one is very interesting from what I've been reading. We can take a quick look at the earnings, because that's really what's driven this stock down and what's driving that value, because prior to these earnings, it was at some insane valuations off the fundamentals. So they lost $58 million in the first quarter compared to the gain of 1.7 million or 1,700 million last year, same quarter. And that came out to 50 cents per share loss compared to the $14.19 gain that they had the prior year. EBIT decreased 85%. Operating loss was $14 million. And it's just decreases across the board. Revenue decreased 63%. Volume decrease of 10%. Average freight decrease of 64%. Last year was an exceptional year for them, but these are some pretty big decreases that we're seeing. And down here is where they talk about how they think that they're going to have positive EBITDA this year. They had a rocky quarter due to the macro and industry headwinds, and there's just low demand for shipping and inventory services. Another interesting thing about this stock is their dividend is not something stable. It is agreed upon by the board somewhere between 30 and 50% of their net income. So I have down here that value if they are able to pull things off. So starting off the year with a 60% decrease in revenue, that's what I'm putting in for 2023. Hopefully they can recover this next year, at least 10% up, but that's dropping their revenues back down to just north of 2020 levels, somewhere between their 2020 and 2021. They come out with a net profit based on how they historically perform with their margins, which were kind of all over the place. we're using a 20% margin. That specific number they haven't seen, but it's about the average across their 2020 through 2022 values. If they can squeak out an earnings per share, they think that they're going to have 500 million. So let's say that they can squeak out 5 cents in earnings per share and see how that's going to change our numbers if they're able to do that. They'd be paying $2.73 as a dividend. And we see that their valuation as of the end of last year has been cut in half, moving from 306 to 152. And the main driver of this was their cash flows. They had a lot of money making it to the bottom line. 45% of their revenue was making it down to the bottom line, which is great. We'll see what they're able to come in with this year. Next big driver that they had is their balance sheet. That has been making huge leaps and bounds year over year. We'll see if they're able to continue that trend. If not, I say they only hold at the 147 valuation. If not, that's really one of the big pillars of their value. Earnings, they go from 59, 52 to less than $1 because their earnings go down to nearly zero. And then their dividend, that dropped down to nearly 1/10 of what it was this last year. So there's some huge moves in these fundamentals. They're not showing consistency as a company, which is a little concerning. And I think the biggest thing for me is the share count. Why, if you have so much cash flow, you're paying out such a massive dividend? They paid out $27.55 in dividends this last year, 160% of their share value by the end of the year. And yet they're issuing shares. They've grown their share count 6.3% year over year on average, which is very concerning because there's no reason that they need to be issuing that kind of shares. They seem to be getting enough money through operations. If anything, they should be buying back shares. So I don't know if that's something the board or just management, but that alone kind of makes it feel like they don't care too much about the shareholders. They just care about the money. The dividends are nice, but of course someone on the board is going to want 30 to 50% of the net profit to be paid out as dividends because they're going to have massive paydays. And I'm kind of on the fence about this stock. I've looked into a few different shipping companies. They all seem to be incredible with their fundamentals. And it may have just been the pandemic period that really helped boost those financials because there was a lot of demand and issues with supply chains. And they were the main profiters of that. Now, if the Chinese economy opens back up and is able to continue as it did previously, 2020, I mean, a $4 to $5 billion top line is not unreasonable for what they were experiencing in 2019 and 2020. So it's kind of just ignoring 2021 and 2022. Those were the anomaly years. what really are we looking at? They weren't even public in 2019. At least by the end of 2020, they had a share value of $12.05. So we can't even truly evaluate 2019. As for 2020, stock would have been $40 in fair value. And that would have been a buy at 34 and a sell at 44. All of the value coming from their cash flows. So I'm curious to see what their cash flows coming at this year. This stock, I almost have to give it a hold. Part of me wants to give it a buy, but the issue is the rising share count and the huge drop off in the earnings per share. They're not showing consistency, and they're diluting your position as a shareholder. So, it's a potential stock for not necessarily a consistent dividend. They're only going to pay out 30 to 50% of their net profit, but that could be, if they have another great year like 2020, that could be a very nice dividend, 160% of your share value. And that's probably part of why the stock is so low, is the investors made their money back and then some off the dividend alone. Full disclosure, I do own 2 shares. I thought it was something cheap that was paying out a massive dividend that I just wanted some exposure to. And that position is down significantly, but at least I am getting paid monthly through the lending income on my portfolio. That is one of the consistent stocks that I get paid at least a cent a month on. But thank you guys for watching. Please like, comment, subscribe. Let me know what stocks you want to see, and I'll catch you next time.